Universal Citizen Forex News. Japan's yen took the spotlight in Asia on Monday, weakening briefly to the 150 per dollar level as investors betting on a further rise in dollar yields lost out to those expecting Japanese authorities will intervene in markets. The risk of Israel's war on the Islamist group Hamas becoming a wider regional conflict kept markets on edge, as Israeli airstrikes battered Gaza early on Monday, and the United States dispatched more military assets to the region. U.S. Treasuries were subdued as investors hunkered down for a European Central Bank meeting and U.S. GDP data later in the week. 10-year yields were around 4.98%, having briefly popped above 5% last week after Federal Reserve Chair Jerome Powell said the U.S. economy's strength and hot labor markets might warrant tighter financial conditions. The dollar index added 0.1% to $106.28. The euro down 0.2% at $1.0574 per euro. The Japanese yen last traded at 149.93 per dollar, after briefly easing early on Monday to 150.14 per dollar, a level last seen on August 3rd when traders had suspected the Bank of Japan intervened to nudge it to the stronger side of 150 per dollar. Masafumi Yamamoto, chief currency strategist at Mizuho Securities in Tokyo, said it seems like a set of investors were betting the Bank of Japan will defend the 150 level, even as others saw rising U.S. yields as a reason to keep pushing the dollar up. While there was some speculation the Bank of Japan might once again tweak its yield curve policy band at a scheduled policy review next week, and also shown it will not let domestic yields rise sharply. The benchmark Japan government bond yield was at 0.855%, its highest level since July 2013. Yields dipped on Friday after the Bank of Japan announced more loans to encourage financial institutions to buy Japan government bond. Even though it hasn't risen lockstep with yields, the dollar has been underpinned by the steady rise in yields at the long end of the U.S. Treasuries curve, driven by widening term premiums on expectations of stronger growth and fiscal slippage. Since mid-July, the trade-weighted dollar index is up 6.7% but has been nearly steady this month. Other analysts pointed to the stability in the yen and China's yuan, both big components of the DXY trade index, as the reason for the tepid moves in the dollar index. Oil prices slid more than $1 on Monday on diplomatic efforts over the weekend to contain the conflict and reducing concerns of a big disruption to oil supplies. Brent crude futures fell as far as $91.14 a barrel, but are still up roughly 10% over 10 days.